Hello viewers, welcome to my channel. I am Hasham Ali Khan. Now we'll start the problems on computation of income from house property. The last video I have explained you in detail regarding the provisions how to compute the income from house property. So before watching this video, I suggest you to watch the previous video to get a command on how to compute the income from house property. Then only you watch this video. Then only it will be helpful to you. It will be understandable to you. Otherwise, every problem will be a different problem, peculiar problem. You will not be able to understand. So theory is very, very important. So if you are new to my channel, I suggest you to visit the playlist of my channel. I've uploaded so many subjects videos on different topics. So watch your, select your subject, take your topic, select the video, watch the video till the end to get the complete command on the subject. Now, before starting the problems, I expect my viewers to have a printout of the problems. I have provided these problems in the link under my description. So take a printout and keep it ready before watching the problems on income from house property. First problem. On 1st April 2019, Sri Jagadish is the owner of a house which is let out to Sri Mohan Lal on a monthly rent of 6,800 and received 3 months advance rent and 12,000 as deposit. So first of all, the owner of the property is Sri Jagadish and the tenant is Sri Mohan Lal. So every month the rent is 6,800. Monthly rent is 6,800. Along with that, 3-month advance rent and 12,000 rupees deposit is received. According to the provisions of Income Tax Act, the advance rent received and deposit should not be considered while calculating the income from house property for the current year. Next, the municipal rental value MRV is 60,000 per annum and the rent of similar building is 8,000 per month. So similar building means it is called fair rent. Fair rent is the rent of similar building in the same locality. So fair rental value is 8,000 per month. Sri Jagadish incurs the following expenses. Municipal taxes 6,000 allowed as deduction. Insurance fire not allowed as deduction. See here, in the previous video I have explained you in detail only 2 deductions are allowed, 24A and 24B. 24A standard deduction 30% of NAV, net annual value. This is a compulsory deduction for every SSC who is having income from house property. Second, interest on loan under section 24B. Only 2 deductions are allowed. Apart from that, whatever other expenditure the landlord has spent, the owner has spent, that will not be considered while calculating income from house property. So say fire insurance premium, ignore. Interest on loan taken to construct the house 13,000. This is allowed under section 24B. Ground rent, ignore. Repairs 4,000, ignore. And collection charges 500, ignore. So in this problem we are ignoring fire insurance, ground rent, repairs and collection charges. These are the expenses paid by the owner, but Income Tax Act says not allowed as deduction. Compute income from house property for the current assessment year. That's it. So very easy problem. The format will remain same in every problem. How to compute the income from house property. Computation of income from house property of Mr. Jagadish for the year and for the assessment year 2021. Gross annual value GAV. The first point you have to compute is GAV. That we have to do it in working notes. From gross annual value we have to subtract municipal taxes. Then we'll get net annual value NAV. From NAV, deductions under section 24. First, standard deduction under section 24A, 30% of NAV. And interest on loan under section 24B. These 2 other deductions. Deduct these deductions, we'll get the income from house property. Now working note I am showing here. The house is not covered by Rent Control Act. So GAV can be taken directly as higher of the following 3 amounts. See here, there are 2 methods of calculating GAV. One, where the house is not covered by Rent Control Act. How we can be able to know whether this problem is covered by Rent Control Act or not? If standard rent If standard rental value is given in the problem, that means the house is covered by Rent Control Act. If standard rent is not given in the problem, the house is not governed by Rent Control Act. So in our present first problem, standard rental value is not given. So house is not covered by Rent Control Act. GAV is higher of the following three amounts. What are the three amounts? MRV, municipal rental value given in the problem 60,000. Fair rental value, rent of similar building in the same locality, that is fair rental value, it is given 8,000 per month. So 8,000 into 12, 96,000. ARV, actual rental value, at what rent the owner has given to the tenant, 6,800, first line it is given, into 12, 81,600. What is the higher of these three? 96,000 is the higher. So GAV is higher of the following three amounts: MRV, FRV, ARV. If the house is not governed by Rent Control Act, if standard rent is not given, then simply take the higher of these three, GAV. The gross annual value 96,000. Municipal taxes are given in the problem 6,000. Now remember, municipal taxes will be allowed as deduction if it is paid by the owner. If municipal taxes are paid according to agreement, if it is required to be paid by the tenant, it will not be allowed as deduction. Similarly, municipal taxes will be allowed only on payment basis. If it is due, not allowed. So 2 points you have to remember. Municipal taxes will be allowed as deduction only if it is paid by the owner. If it is paid by the tenant, not allowed. Similarly, municipal taxes will be allowed only on payment basis. If it is due, not allowed. So here paid, 6,000 rupees paid. 90,000 is the NAV. Deduct standard deduction, 30% of NAV, 30% of 90,000, 27,000. Interest on loan taken to construct the house, given in the problem, 13,000. Take the total 27 plus 13, 40,000. Deduct 90 minus 40, 50,000 is income from house property. That's it. This is the complete solution of problem number 1. Now in working note, we'll write on 1 or 2 points explaining the items. Advance rent received and deposit received from tenant should not be considered for calculating income from house property. First one. In this problem, in the first line it is given the owner has taken some 3-month advance rent and also some 12,000 rupees deposit, and this advance rent deposit will be refunded at the time of vacating the house. So this should not be considered while calculating income from house property. Secondly, no deductions are allowed for fire insurance premium paid, ground rent paid, repairs and collection charges paid. These expenses will not be allowed as deduction, since a common deduction, that is standard deduction under section 24A, is allowed for all incidental expenses incurred by the SSC in relation to income from house property. So Income Tax Act says one common deduction we are allowing. That common deduction is standard deduction for meeting all expenses incidental to income from house property. So don't ask any other deduction. Income Tax Act says we have given one deduction which covers everything. So no deduction will be allowed for this insurance premium paid, ground rent, repairs or collection charges. Not only in this problem, every problem you have to write this. That's all. The first problem completed. Now see the second one. Mr. Mohan Reddy is the owner of a house property whose municipal valuation is rupees 2,50,000 per annum. So here the owner of the house is Mohan Reddy. MRV of the house is 2,50,000. Standard rent is 3,60,000 per annum. In this problem, standard rent is given. So the house is governed by Rent Control Act. Now here we have to follow a different method for calculating GAV, for calculating gross annual value. There is lettered on a monthly rent of 25,000. Actual rental value is 25,000 per annum, per month. And fair rental value is 2,10,000 per annum. So we are given MRV, FRV, SRV and ARV. All the 4 values are given. Municipal taxes due 25,000, out of which 15,000 is paid so far. Total municipal taxes comes to 25,000, but the owner has paid only 15,000. So whatever is paid, that only will be allowed as deduction. Only 15,000 will be allowed. Other expenses, repairs, ignore. Insurance, ignore. Interest on loan taken to purchase the house, 42,000. This will be allowed. The tenant has not paid the last 1 month rent. That means the tenant has not paid 1 month rent. It is rent due. It is called outstanding rent. So remember, outstanding rent is not unrealized rent. It will be received in the next month. There is difference between outstanding rent and unrealized rent. Unrealized rent means the rent which is not at all recoverable from the tenant. Not at all recoverable from the tenant. Unable to receive at all. It is called unrealized rent. Unrealized rent will be deducted from the rent of the year. Actual rental value may say unrealized rent will be deducted. But here it is given, not given unrealized rent. It is saying tenant has not yet paid, means next month he may pay. The outstanding rent should not be considered. Find out the income from house property for the current assessment year. This is the problem. Now, second, computation of income from house property of Mr. Mohan Reddy for the year 2021. Now, GAV, gross annual value. First of all, format as usual we have prepared. As usual format. First, GAV minus municipal taxes will get net annual value. From NAV, deduction under section 24. 24A, standard deduction, 30% of NAV. Section 24B, interest on loan taken to construct, to purchase, to repair, to renovate or to reconstruct the house. Then we'll get income from house property. Now, working note. The SSC is covered under Rent Control Act since standard rent is given. In this problem, previous problem standard rent was not given. In this problem standard rent is given, so the house is covered by Rent Control Act. So GAV is calculated in the following 3 steps. Now concentrate. In 3 steps we are calculating GAV if the house is governed by Rent Control Act. If the house is not governed by Rent Control Act, only 1 step we can calculate GAV like previous problem. Now, first step, ERV, meaning expected rental value. ERV full form is expected rental value. So, ERV is higher of the following 2. First, MRV, FRV, municipal rental value, fair rental value. The higher of these two, MRV, FRV, the higher of these two is called ERV. So MRV is given 2,50,000, FRV is given 2,10,000, whichever is higher, 2,50,000. So 2,50,000 is the ERV, expected rental value. Second step, adjusted ERV is least of the following 2 amounts. First step, ERV. Second step, adjusted ERV. Now adjusted ERV is least of the following 2. Which are the least? ERV, which we have calculated in first step. In first step we have calculated ERV, that comes to 2,50,000. So here ERV 2,50,000. Second, SRV, standard rental value, that is given in the problem, 3,60,000. Now whichever is least is the adjusted ERV. So least is 2,50,000. So adjusted ERV is 2,50,000. 2 steps over. Third and last step, GAV is higher of the following 2 amounts. Higher of the following 2 amounts. Adjusted ERV we got 2,50,000. Actual rental value, ARV. ARV stands for actual rental value. That is 25,000 per month into 12, 3 lakh. 25,000 into 12, 3 lakh. Now 2,50,000 or 3 lakh, whichever is higher will be the GAV. So 3 lakh rupees is the GAV. Again I repeat, because this is the first time we are coming across a house which is governed by Rent Control Act. So when a house is governed by Rent Control Act, in 3 steps we calculate GAV. First step, ERV. ERV is higher of the following 2, MRV, FRV. We got ERV. Second step, adjusted ERV. Adjusted ERV is the lower of the following 2, ERV and SRV. ERV and SRV. Lower of these following 2 is adjusted ERV. Last step, third step, GAV is higher of the following 2. That is adjusted ERV and ARV. Adjusted ERV and ARV. The higher of these 2 is GAV. That's all. So we got gross annual value 3 lakh. From this we deduct the municipal taxes. The municipal taxes paid is 15,000. Total municipal taxes 25,000 will not be deducted. Only payment method will be deducted. 15,000 at 2,85,000. Now standard rent, standard deduction. 30% of NAV, 30% of 2,85,000 85,500. 30% of 2,85,000, 8,500. Interest on loan taken 42,000. Take the total 85,500 plus 42,000, 127,500. Minus kar do, 1,57,500 is the income from house property. Now in working note, I'll write the working notes regarding municipal taxes. Municipal taxes will be allowed as deduction only on payment basis. Due amount is not allowed as deduction. You have to keep this provision in mind, because the coming problems also will come across. The municipal taxes will be allowed only under two conditions. The first, it must be paid by the owner. If it is paid by tenant, not allowed. Secondly, it will be allowed only on payment basis. If it is due, not allowed. Then repairs and insurance are not allowed as deduction. Just now I told you in the previous problem. And outstanding rent should not be treated as unrealized rent. Unrealized rent is different. Outstanding rent means the rent has not been paid by the tenant, but afterwards he will pay. In 1 month he may not be able to pay. Next month for 2 months he will be able to pay. So outstanding rent should not be considered while calculating income from house property. Unrealized rent means the rent which is not recoverable from the tenant, that will be deducted from AR. That's all. So first and second, two problems we have completed on computation of income from house property.